After just one red week, they bought the dip and they're trying to make a new high. You can see that from the weekly candle, we are sitting near all-time highs. And here's how the SPX up-close battle looks. But first, we have the narrowest market breadth in decades. So we're basically setting up either for a catch-up trade by the IWM and the DIA, or by the leaders having some sort of a correction out of nowhere. In other words, the energy is built up and it's spending too much time here. It's going to have to resolve itself. They have a plus 8% or so just built up, and they haven't taken it yet. They've been very hesitant about it, and they have been unwilling to take any more than one red day in a row. The base case going forward is that the bulls remain completely in control of the price action. If I have a bearish portfolio, I should use any weakness to fix my problems and book profits quickly, like we did in the last few days whenever we had red days. I made sure that my own portfolio on the bounce doesn't get hurt short term. And monitor my longer dated bearish positions and make sure that they are well defended. Conversely, the bullish portfolios should not overstay their welcome without doing anything. So yes, the bulls are winning, but proper action would be to balance the portfolio. Therefore, trying to sell covered calls might be one idea. If not, selling some credit call spreads in the indices would just balance the book. The base case now also involves 4 rate cuts for this year, according to JP Morgan and more. This sounds a little aggressive with regards to rate cuts, but for that, we will judge it by how the TLT is acting, because that's the real world interpretation of where yields should go, for example. This is the look on the TLT. Strength in the TLT would be along the lines of rate cuts, and the last few days it had drifted lower. So we are monitoring the buy the dip mentality. I'm showing you the QQQ, and I will report back on any hints of change in that. Now, I do have 2 points of curiosity. In this last buy the dip action, why are they buying the XLP, which is the ETF for the staples? Those are typically defensive stocks. And how come Apple is catching such a strong bid? It actually also acted at some point for decades as the place where smart money goes to hide before trouble hits. Like only 50% of the S&P stocks are above the 50-day moving average. That's a technical thing, but that is down from 75%. That's quite the drop. And that was only in July. And something like the median stock trades at 11% below its own 52-week high. So half the stock market, like 250 stocks, are 11% below their 52-week highs. So now we look at the charts from the S&P. Any drops into 632, 33, 31 will be met by buyers. If you want to mark your charts, if we lose the 621 zone and more importantly the 619 zone, then you would say, uh-oh, what's going on here? We may be actually changing some behavior. So that's the same on the QQQ, if not even worse. The QQQ, I believe, almost cracked into an all-time high on Friday at the bell. You can see only one wick stands in the way. So because the Terra caps are in here the hardest. So 7 largest stocks make up a gigantic portion of the stock market, of this index. So be careful. I can tell you that 578.2 is important just for that red W you see on my screen. If you are a fan of charts, you know what that is. It just says that we could dip back into 565 and or 560. And if that happens, they will try to buy the dip. But if we lose 552, then, maybe, just like that other mention on the SPY, maybe that would be significant enough to say, for the short term, maybe the bulls lost a step. For the IWM, it's not a mystery. 223 is your first hurdle. 225 is your second. I think if you take out 225, you have a legit shot at 227. Support or target at 217.5. Another zone is 215.5. But if you lose the low from the other day, 212. If you lose 212 to make it round, then again, that would be a significant change. The DIA represents the Dow, and it has a similar chart makeup as the IWM, but it is a lot closer to its all-time highs than the IWM. But they have the same battle. So this one, 445, is your challenge and opportunity, and then repeat that at 448. So 445 and 448. On the way down, if you want to put an alert, it would be 433. Or better yet, join us in the live room. We're there 10 hours a day, every day. No joke. So what do I plan on doing as far as trading is concerned? I will look to reset some bearish positions that I closed in the last dip. And I would look to find some new bullish positions. There are quite a few stocks falling into some supports. As far as catalysts, this week we do have earnings, of course. You're looking at them. And also we do have the all-important inflation reports, I believe, on Tuesday and on Thursday, CPI, PPI, or both. My overall statement, folks, is that we need to stay disciplined. Discipline means that we stay cautious when nobody else is. It's a simple mantra from our friend Mr. Buffett, and everybody's bullish to high heaven. So I just want to be a little bit less bullish than the prevailing meme that's going on right now.